Hello everyone and welcome to my morning report analysis videos on Thursday 21st of March with me, Richard Perry, market analyst at Hantec Markets. We've had the big news from the Fed overnight. Last night the Fed had a significantly dovish move actually. The market had sort of already priced in a fairly dovish move from the Fed, but they got far more than they anticipated yesterday. The Fed has basically all but now ruled out rate hikes for 2019, which is a real surprise, having previously guided for two, now guiding for none. They've also cut their projections for growth, and also they've, in terms of the balance sheet, that reduction program, they're going to end that sooner than anticipated. So a real sort of triumvirate of dovish moves there from the Fed, and that really did hit the dollar last night. The dollar index really fell really sharply yesterday, as Treasury yields fell below 255 on that 10-year yield. That was took the 10-year Treasury yield to its lowest since January 2018. So really significant move to the downside there. The 2-year also in a sharp move to the downside. But also that the result of that is that the yield curve continues to flatten off. The 2-10 spread is now falling at levels not seen since December, and it really has impacted the dollar in a negative way. I'm going to talk through the chart implications in a bit, but certainly we've seen key moves on the euro, on gold, and on the yen. And that sort of fairly much is consolidating a little bit more today. A little bit of an unwinding move today, but still it's a significant move that we saw on the dollar. Also, equities interestingly jumped on S&P 500 and the Dow last night on the immediate reaction, but subsequently I think the markets looked at how dovish the Fed had become and the implications of that. Really, obviously no rate hikes is equities positive, but is the Fed turning bearish? It really is the question. It's really is a significant move that they've made, and what can they see is the question. Now, in terms of equities today, fairly flat now on the S&P 500 futures. European markets are a little bit mixed. DAX lower, FTSE higher. FTSE taking maybe a little bit of benefit from the underperformance of sterling today. That correlation is still a factor. As I said, gold back above 1310. I'll talk about the chart implications of that. In terms of data today, we've got the UK retail sales out in a very short while, actually. Actually, they've now come out as I speak. 3.8, so better than expected on retail sales. Instead of seeing a month-on-month decline, you've actually, you've actually seen a miss. Sorry, I should say you've actually seen a miss. No, sorry, I'm reading that wrong. You've actually seen a month-on-month improvement. So that expectation of a decline, you've actually beaten that as an upside surprise. So that's a positive. And also you've got the year-on-year data being better than expected as well. So that's sterling supportive. So that you'll see sterling rebounding a little bit on the back of that. But other than that, you've got the Bank of England this morning as well, 12 o'clock noon. Bank of England is going to give its update. I mean, Brexit uncertainties is huge still. So obviously no change there expected from the Bank of England, and unanimous decision as well. So you've also got this afternoon weekly jobs claims from the States, as is basically at 226 on there, and the Philly Fed expected to improve back to positive at 4.6. Now, my chart today is silver and gold, both key moves, and what we've seen is silver, which had been bumping up against this pivot line around 1546, not repeatedly failing to close, and actually interestingly closed pretty much bang on that level, but today has moved to the upside, and that has come in conjunction with the momentum indicators calling for an upside break of that pivot as well. The RSI above 50, the MACD lines crossing higher in a bullish cross, the stochastics accelerating higher from a bull kiss that I refer to it as. So that's positive, really is positive indications on those momentum indicators. So if silver can close above that 1546 level, and I think that would reopen the upside once more. You'd be looking at 16 figure to 1620 as those old highs coming back in again, and it certainly would look as though that buying into weakness is once more an opportunity. You've got 15 1550, 1545, 1550 as a little support zone now on the silver chart. So any retreat back towards that pivot is a buying opportunity, but it looks pretty decently set up now, and certainly if you get a closing breakout, it's a positive move. So with that in mind, I wish you good luck in trading, and I'll speak to you again later.